morning everyone and welcome back to Morning Markets from True Potential. We'll kick things off by looking at stock market returns over the last 24 hours. Here in the UK, the FTSE 100 was up 0.9% and the FTSE 250 was also up 0.3%. We saw strong returns also from US equities. The S&P 500 was up 1.1% and the Nasdaq was also up 1.3%. European equities were also positive, up 1.2%, but we did see some weakness overnight from Japanese equities, which were down around 1%. But overall, good returns from global equities, helping to bounce back and recover some of those falls that we saw on Monday. Oil and banking stocks did particularly well here in the UK. Oil stocks have been benefiting from the higher oil price, which pushed higher again yesterday, up to $83 a barrel. That was after the OPEC Plus meeting on Monday, where the cartel of oil producing countries decided against pushing production higher than originally planned. So they had originally scheduled to increase production by 400,000 barrels a month. They're not going to revise that higher, and that's despite the higher oil price. They're doing so in order to allow them to facilitate the much needed investment in oil production. Companies such as BP and Shell here in the UK and within the FTSE 100 delivered good returns. They were up around 2% yesterday. European equities were also strong, again driven by the oil and banking sector. Banking sector did well, up around 3%. Based on good fundamentals, but also some noticeable investment banks giving them a positive outlook ahead of the Q3 earnings season, which kicks off next week. US equities also delivered positive returns, growth outperforming value, while financials and technology stocks doing particularly well. In terms of economic data, we had the latest US ISM non-manufacturing index data out. This is a survey which reflects business conditions and activity in the US service sector in a given month. The index came in well above expectations at 61.9 against the 59.8 forecast. Remember, a reading above 50 indicates that activity is expanding, so this was a very healthy reading for the US. New orders noticeably increased, highlighting the strength of overall demand. Input prices continue to challenge and yet to show any sign of easing as labour, resources, logistics and materials continue to affect activity. We also had a similar survey out for the UK and for Europe. For the UK, the reading was very positive, coming in well above expectations and higher than the previous month, in at 55.4. The pickup in output is encouraging after a recent slowdown in activity, but the outlook continues to be challenged by the supply chain problems. The survey highlighted the supply constraints has continued to contribute to the escalating inflationary pressures and also hit new orders. The rate of prices charged by firms also rose sharply in August amid the rise in fuel, energy and staff costs. In the bond markets, we saw bond yields edge up higher, so the UK 10-year government bond yield was up 2 basis points to 1.08%, and similarly in the US 10-year government bond yield was up 3 basis points in at 1.56%. In commodities, as I mentioned, oil was higher. It was up around just short of 2% yesterday. Gold was weaker, down 0.3%, which you would expect when you've got government bond yields pushing higher. We saw a continuation of the pound strength after couple of weeks, trading against the US dollar at 1.36 and trading against the euro at 1.17. There's plenty of economic data to watch out for today. Most importantly for us, we'll get the first of 2 US employment reports this week with the ADP employment survey data. Important, as a healthy increase in the labour force will generate speculation that the Federal Reserve will be on course to increase interest rates next year. We'll also have the retail sales out from Europe and hear from European Central Bank members. That's all for today. Thank you for listening, and we'll see you tomorrow.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.